So 2 uploads in one day. That's pretty wild for me, right? Well, I really wanted to talk about this topic, and everyone else is already getting all of their GameStop content out today. So I figured I might as well join in on the train and get my commentary out there as well. This is going to be audio only, frankly, because it just takes a lot less effort to turn on a microphone and start recording. Although I will probably add in some pictures to this as well. And if that ends up being the case, then it really only becomes marginally less effort or less work compared to shooting and actually editing a video. I actually also might do this informal audio format in the future as well, but let's just see how this first one turns out. I need to give this a name. Maybe it'll be like, the short, long talk or something stupid like that. Anyway, I became loosely aware of the GameStop stock run in early December. Now, I don't spend a lot of time in Wallstreetbets subreddit, but I do frequent Reddit, and as someone who's interested in financial news and economic news and stock market, it's hard not to poke your head in there and figure out what the boys are doing to earn their tendies. And Reddit, and specifically Wallstreetbets subreddit, is where a lot of this, a majority of this originates from. All the GameStop news that we're seeing and AMC and some of the other stocks that are kind of being targeted by Wallstreetbets, it all starts and originates from here. Now, as big as Wallstreetbets is, it's possible that you don't have any background into what it is. Maybe even someone who's listening to this doesn't know what Reddit is. Although in my limited demographic data for this YouTube channel, it's overwhelmingly like 20 something to 30 something year old males. So I'm 99% sure that if you fall into that demographic, you know what both of those places are. Anyway, in the event that my mom, who lovingly supports and listens to the YouTube channel and watches my videos, happens to listen to this one, I'm going to give a brief description on what Reddit is, and more specifically, what Wallstreetbets is. So bear with me, this will probably be like a minute or a minute and a half of me telling some of you information that you already know. If you just can't stand it, then skip ahead like a minute and a half or something. I don't know. Anyway, Reddit is like a modern day image board / forum for various interests, and it's heavily user driven, meaning that people sign up and they create accounts for this website, and they provide all of the content for the website, and they break everything up into different categories based on people's interests. Wikipedia even says that Reddit is a social news aggregation, web content rating, and discussion website, which to me is, I don't know, just like a fancy wording to say that Reddit is a website where you share images and interesting links and other interesting things that you find on the internet, and you can comment on them, and it's all typically broken up into various community-driven categories that people subscribe to and participate in. So a good example of this is the Phoenix subreddit, right? I live in Phoenix, Arizona, and this city has its own subreddit, its own category on the website Reddit, where people can share things related to Phoenix, whether it's news or questions or pictures or just anything related to Phoenix. And there are countless subreddits out there for every single interest. So subreddit is just their version of category, right? That's just their word for it. Now, Wallstreetbets happens to be a subreddit on Reddit. And Wallstreetbets it's something that is difficult to define. The most basic thing to say about it is that it's a place to share news and links and content about stocks and options trading. Now, the problem with that description is that it doesn't do any justice to what goes on in Wallstreetbets. It's like saying that the movie Fight Club is about some guy who can't fall asleep. In Wallstreetbets, people really play up like memes and internet culture, and they blend it in with stocks and more specifically options trading. And there are, for lack of a better term, legit crazy people in there who push things to their extremes, right? They broke the Robinhood app with their infinite leverage glitch, which is essentially they were able to get unlimited leverage or unlimited investment loans from Robinhood which resulted in very large positions on their options trading. And of course, people were willing to take this to extremes, with their losses falling into the multiple six figures range. People post pictures of just insane losses and frankly also insane gains. It's basically the wild, wild west of stock trading, and the more extreme your actions are in any direction, the more attention you get, for better or for worse. The trading is aggressive and reckless, and if you even suggested that you might be interested in talking about like index funds or mutual funds or investing long term, you'd be destroyed in the comments for even considering something like that. I mean, their whole thing is, don't you even want to make money? Don't you want to go to the moon on one of these stock purchases? Wallstreetbets it's a place where for every one photo of someone being up $400,000 on Tesla options, there are 10 photos of someone's Robinhood account, which is completely decimated and they're down hundreds of thousands of dollars. And the user posting about it is now talking about how they have to move back into their parents' house to live off of chicken tenders and play Pokemon for the rest of their lives. But every once in a blue moon, an absolute gem will come out of Wallstreetbets. Which brings us to GameStop. Now, like I mentioned a little bit before, I became loosely aware of the GameStop stock price increase over the last 4, maybe 5 weeks. And honestly, this was mostly just from the news. First, it was that, GameStops are dying. And actually, that was maybe over a year ago prior, is that GameStop stores are closing and they're just like being wiped off the face of the planet. And now, some months later, the stock price is booming, which is the complete opposite. And like I was saying before, when I go on Reddit, as much as I enjoy financial and economic and stock market news, I don't always poke my head into Wallstreetbets for too long. But it's hard not to pop into Wallstreetbets when you see news of them and how they're driving up the GameStop stock. I mean, after seeing that the price of GameStop was hovering around $350 today, I knew I had to go in there and see what was going on. And the rumblings I had heard in the media was that it all started in Wallstreetbets. And that is partially true after doing the research. I mean, the insane price surge that we've seen over the last 2 weeks is absolutely stemming from Wallstreetbets and their willingness to just push things to the extreme. But when you get to the history of how all of this actually started and its origins, it's actually rooted in some solid analysis. And it takes place in, I would say, 3 different places. The first is from a Reddit user known as DeepF, FUCKING value. And I'm just going to refer to that user as DFV from this point on because apparently YouTube doesn't like bad words. So we'll try to keep it PG in the event that, this doesn't get flagged. Anyway, DFV starts posting over a year ago now at this point. They start posting what they refer to as GME YOLO. And if you don't know what GME is, that is just the stock ticker for GameStop. So anytime you hear me say GME, I'm referring to GameStop. He's got this picture of his shares and all of the values and data associated with him buying GME since like June of 2019. And keep in mind that in June of 2019, the stock price for GME is approaching all-time lows. And DFV has like over $50,000 in there. I'd have to comb through a lot of comments, but basically DFV believes that this stock is definitely undervalued and he's playing, or they are playing a long-term game here. Another interesting fact at this time is that GME is either already or quickly becoming one of the most shorted stocks. Basically, that just means that a lot of investors, investment banks, hedge funds, investment firms, they all believe that this stock at some point is going to plummet relatively soon, and that the company is going to go under, or they're going to have to shut down all their stores, or foreclose. And the media and the public sentiment is more or less backing this, right? They also are pushing this news out. I mean, their whole idea is, who buys physical video games when everything is moving to digital now? And, Google Stadia is like a streaming gaming platform. And the future is digital and streaming, not physical video game discs. And even around that time, you're seeing news of GameStop stores closing. So a move like this would, and in DFV's case, catch a lot of criticism. Now, DFV kind of flew under the radar back then because they were very early to the game, and not many could see what DFV was seeing, at least not yet. Now, someone else who did some analysis and saw something in GameStop was Dr. Michael Burry. And if you don't know who Dr. Michael Burry is, Michael Burry is famous for being one of the people who shorted the housing market in 2008 because he realized that it was all propped up. It was full of bad loans, and the housing market was just propped up on crap. And he was portrayed by Christian Bale in the movie The Big Short, which is about the 2008 financial crisis. It's around the same time that DFV is starting to make moves that Michael Burry and his investment firm Scion Asset Management also start making some noise about GME as well. See, GameStop is actually one of their biggest holdings, and Burry sends a letter to the board of directors at GameStop urging them to do a share buyback, basically saying GameStop should buy back all of the shares that they have outstanding in the market. And that can do things like increase the value of the stock and the earnings per share, et cetera, et cetera. And this is interesting because a company that is essentially investing in themselves by doing a move like this would usually have kind of like a positive outlook on their future. And that's just not what's being reported in the media at the time. And that's just not the general consensus of what GameStop's future looks like. So again, this is kind of contrary to what's going on in the news. So even though Burry in his letter is kind of criticizing GameStop and their upper level management and CEOs, he clearly sees something there. Now, if you have seen The Big Short, hopefully you find this funny, because I want to break away to read something really quick. Because if you have seen The Big Short, I think this is pretty hilarious. It's a rewrite of the scene where Michael Burry, played by Christian Bale, goes to the banks on Wall Street. And in the movie, he goes to the banks and he says he wants to short the housing market. And the banker thinks, of course, like, okay, this guy is an idiot. This is a terrible idea, but it's Wall Street. They're going to take the money. And in this rewrite, they're obviously referencing GameStop stock. And I wish I could take credit for this, but this is actually from a user named Killer Kelsu on Reddit. So I'm just going to read the name of the character and then what their line. This is Michael Burry. I want to buy calls on GameStop stock. A call that pays off if the company shows growth and beats expectations. Goldman Sachs sales rep. You want to bet on physical video game sales growing? Michael Burry. Yes. Goldman Sachs. Why? These stocks only rise if millions of tech-savvy gamers pay for outdated technology. That's never happened in history. If you'll forgive me, Dr. Burry, it seems like a foolish investment. Michael Burry. Well, based on prevailing sentiment, the market, IGN, the banks, and popular culture, yes, it's a foolish investment, but everyone's wrong. Goldman Sachs sales rep. This is Wall Street, Dr. Burry. If you offer us free money, we are going to take it. Michael Burry interrupting. My one concern is that when the stock skyrockets, I want to be certain of payment in case of solvency issues with your bank. Anyway, I don't know. I just thought that was hilarious because I've seen the movie, and in context, especially, it's funny. But if you haven't seen the movie, it's definitely worth a watch, especially if you're interested in like economics and finance. It's really interesting. It's very entertaining and informative. At the very least, you can at least YouTube Michael Burry talks to Wall Street bankers, and you'll probably find the original clip that this is based on. Like I said, with context, it's a bit funnier. Anyway, going back to what's going on with GameStop. It's September 2019, and obviously DFV from Reddit and Michael Burry see something here with GameStop. In fact, DFV posts on Reddit taking issue with the Michael Burry letter that was sent out, and he says, quote, "Thanks, Michael Burry, for jacking up my cost basis." So obviously he's keeping an eye on things with GameStop and Michael Burry as well. And again, they're both seeing something here. DFV starts posting monthly updates regarding his position with GME. He calls them like GME YOLO updates, and he's posting them every single month. I'd imagine this is probably just for tracking purposes, but probably also for a bit of I told you so later on when the GME ticker, the price takes off. So fast forwarding to September 2020, a Reddit user by the name of Airdoon made a post titled GME Short Squeeze on Wallstreetbets. And this is that third origin point of where the GameStop boom takes place. Now keep in mind that posts made by DFV and Airdoon, they're not getting a lot of attention yet, and it's all still flying under the radar. Although I would say DFV has been gaining some traction since 2019, and more people, although still not lots of people, are paying attention to what he's doing. So Airdoon begins his post by kind of jabbing at the criticizers and non-believers in a sarcastic tone regarding the incoming increase of the GameStop stock price. And I'll just read his post word for word here because it's really perfect. And remember, this is 4 months ago, so GME is still under like $12. It hasn't really taken off or anything at all. So here's Airdoon's post. This is for all of you who think GME is the next blockbuster because games are going digital. That's why no one buys physical gift cards anymore, right? The same geniuses throwing money at companies with no revenue, colors, and companies whose competitors are giving out their products for free. I'm going to tell you why everyone is buying it and why DFV is going to be a multi-millionaire soon. Short squeeze. GME is one of the most shorted stocks. 55 million of 65 million shares are short, including greater 100% of float. Based on average volume, it would take them over 15 days for all shorts to be covered. For more than half of shorts entered under $7 and are now taking losses. A price spike from good news could trigger a short squeeze and force shorts to cover at higher and higher prices. If only there were some good news. Enter Ryan Cohen. In 2011, Ryan started competing with Amazon, Walmart, and Costco to sell a commodity. Despite historic failures by predecessors, he thought he could prevail by focusing on customer service. He ended up selling his company for $3 billion, and now it is worth $27 billion. Since then, Ryan has been very selective about his investments, saying no to 99% of opportunities and investing only in AAPL, WFC, and GME. Last Friday, Ryan filed a 13D indicating he bought a 9% stake in GME. The updated filing shows that he bought 415,000 shares yesterday, including 100,000 at $6.726, and now owns a 9.6% stake. He might continue buying, but we won't know until after Q2 earnings next Wednesday. Since the filing, GME is up around 40%, and short borrowing costs have increased from 3.9 to 8.5%. But why would he get into GameStop? People are as fanatical about games as they are about pets. He doesn't have to build a company from scratch. He can take the Chewy focus on customer service and Chewify GameStop. He's also joined by James Simonic, former CEO of PetSmart, who is on the boards of both PetSmart and GameStop. Ryan's addition changes the whole trajectory of this company, no longer with the terminal value 0. Don't forget, GameStop owns ThinkGeek and has been shifting into toys and collectibles. But even with games, there is an upcoming catalyst. New console cycle. New hardware is not very profitable for GameStop, but resales are. And a new console cycle means that people will get rid of their old consoles via trade-ins, which GameStop can then sell at healthy margins. Ryan Cohen is long GME. Michael Burry is long GME. And even the guy who bashes GameStop on YouTube is long GME. GME is still trading below book value. Get in while you can. And that's back in 4 months ago. That's like, September 2020? Remember, shares are still less than $12 at this time. So there it is, right? This is likely what Burry saw and what DFV saw that made them go long on GME. And this is the basis for why GME or GameStop was undervalued in 2019, right? You have to think that Burry and DFV were doing the analysis and seeing this. But this is all just the starting line, though, because I don't think Burry or DFV could have predicted just how wild things are getting or would have got, or are continuing to get, rather. Now, remember when Airdoon mentioned that GME is one of the most shorted stocks? Well, when Wallstreetbets started to catch on to all of this and they realized that a lot of hedge funds and investment firms were betting hard on these short positions, so much so that they had more short positions than actually existed, and this was artificially driving the stock down, which, that's BS, right? I mean, once Wallstreetbets gets a hold of this, they're out for blood. So how do you punish the people, the manipulators that are doing this? Well, one way is by something called a short squeeze. And this isn't necessarily a punishment tactic. It can happen organically, but Wallstreetbets, after they got wind of all of this and caught up with DFV and Michael Burry and Airdoon, they had a plan. Airdoon said a price spike from good news could trigger a short squeeze. And his good news was Ryan Cohen and the next-gen consoles. But that doesn't cause GME to hit $350 a share, does it? It's the short squeeze that does. A short squeeze is, well, first let me just give you a really super simple example of what shorting a stock is. And I'll do my best to explain this. I'm no expert, but here we go. When you short a company, you're essentially betting that the price is going to go down. And if the price goes down to the point that you anticipate, you win your bet and you end up cashing out big. Hopefully, right? I mean, assuming you put a lot of money into it. So from a simple but somewhat practical example, you do this by borrowing shares, right? So say you borrowed shares from someone named Bob, and those shares are worth $10. Well, you're going to take those shares that are worth $10 and you're going to sell them to Alice for that full $10 price. So you went to Bob, he had 10 shares, you borrowed them from him, and you eventually need to make Bob whole. You need to get him back the same number of shares that you borrowed from him. So in your pocket, you have 10 shares. Now you go to Alice and you say, hey, Alice, you want to buy these shares? And Alice says yes, and you charge her the full price of $10. So now you have $10 in cash. You owe Bob 10, however many shares that you originally borrowed from him, and Alice has $10 in shares. If the price goes down, if everything goes according to plan, the price of those shares will drop down to $5. And when they do, you're going to get in contact with Alice and you're going to buy them back at a reduced price. So of your $10, say that the price of the shares goes down to $5, you're going to say, hey, Alice, I will buy those shares back from you for $5. And Alice is going to want to give them to you because, the price is going down and she's going to try to get out of this bad position and retain at least some of her money. So once you buy them back from Alice, you now have the shares that you owe Bob, and you also have $5 in cash. So you just give your shares back to Bob that you originally owed him, and you keep that $5 as profit. And a very simple, simplistic example, that is what shorting a stock is. But what happens if the price goes up instead of down? Well, if you're shorting a stock and it starts going up, you'll want to get out of that position before it gets too high, because the higher the price gets, the more money you lose. Because in our example, right, if we go back to Alice having those shares and she bought them for $10, if the price goes up to $15 for those shares and Bob starts demanding his shares back, you have to buy them back from Alice at that higher price of $15. And that's higher than you originally sold them for, right? You only sold them for $10. So in order to get the shares back for Bob, you now have to pay $15 to get the shares back, which means you come out of pocket $5, aka you lose $5, and you have to give those shares back to Bob. So you're just out $5. Now, if the price starts increasing rapidly, you get what's known as a short squeeze. So you have a short position, the price rises, and now you have to cover your loss, right? So you liquidate and you start buying back shares so that way you can get your original shares back to the person that you borrowed them from, or the entity rather that you borrowed them from. And you want to do this quickly so you can minimize how much money you lose by having to buy back more expensive shares. But if you think that the stock is still going to go down, you might buy in at a higher price to kind of play a long short game, if that makes sense. Well, basic economics starts to kick in here, right? I mean, once you start increasing the demand and lessening the supply, it's going to drive the price up and it's going to keep cycling, right? You get a short position, the price increases, so now you have to get rid of that short position and you need to buy more shares. The demand goes up, the supply goes down because you and other people are buying shares. And when demand goes up and supply is down, prices go up. I mean, that's what we're seeing in the housing market, right? Now, imagine that you mix in potentially thousands, even hundreds of thousands of people from Wallstreetbets who catch on to some of this manipulation that you're doing. Not you, but the hedge funds and the investment banks. And they want to fight against that. So as somebody from Wallstreetbets or somebody who's just, part of this party, this raid against the hedge funds and the big investment banks and investment firms, you start buying up GME shares with no intention of selling them. Again, basic economics. Demand increases, supply goes down, price rises. So all of these short positions are looking really bad. And the longer that you hold on, the higher the price goes, the more these hedges bleed. And frankly, it's hurting on quite a few of them. News and media would have you believe that GameStop was collapsing and a lot of investors and hedge funds took this short position. Well, what happened in the case of GME was that it wasn't on its last lifeline like many people thought. And DFV and Burry were right. It's got potential to go up. Even Airdoon knew that when he or she posted that information about Ryan Cohen and new consoles coming out and how good news, even just a little bit of good news, could potentially cause a short squeeze. Well, that only gets exasperated when Wallstreetbets gets involved. I mean, once Wallstreetbets caught on and saw an opportunity to go after the investment firms and hedge funds, they went all out. And that is how we've gotten to today, where we're seeing these crazy record high GME prices. Now, the rest of this is just my personal opinion. So whether you agree with it or not, it's okay. Just don't shout me down in the comments. But when it comes to this situation, I think that this situation is absolutely hilarious. It's absolutely hilarious. I was spamming my friends earlier on Discord, trying to catch them up on all of this news because I thought it was just so funny and low-key was shocked about what was going on. Apparently, TD Ameritrade, which is a popular brokerage, has blocked the trading of GME and some of the other stocks that are being targeted by Wallstreetbets. Goldman Sachs was crying about, quote, engineered short squeezes, which even if they didn't say by name, obviously they're talking about Wallstreetbets and they're talking about GameStop or GME. And to me, it's so ironic that they and many others on Wall Street, that's the actual Wall Street I'm referring to, are all getting up in arms about Wallstreetbets manipulating the stock market when hedge funds and investment banks and this big banking investment machine, they literally do this all the time. I mean, now even Joe Biden is apparently monitoring the GME situation according to the White House. Why is it that when Wallstreetbets, and I'm kind of using that synonymously with, I don't know, normal people, although it would be tough to call the people on Wallstreetbets normal, and I don't necessarily mean that as a bad thing. But why is it that when Wallstreetbets wants to make a little bit of money, the powers that be, the economic machine, the banking, investment, hedge fund machine, they all freak out? But when these same investment banks and hedge funds blew up the market in 2008, the only punishment they got were bailouts. You know that saying in the United States that you shouldn't vote with your pen, that you need to vote with your dollars? This is definitely a statement akin to something like that, right? This is definitely a statement that's a big FU to the big banks and the investment firms. And obviously it's working because it's ruffling feathers. Now, of course, they aren't the only ones getting hurt in all of this. In fact, there's always likely going to be collateral damage in this kind of situation. And it's unfortunate that some of this money, even the ones that are being held by the hedge funds and being invested with, comes from normal people like you and me. But the idea that the big economic manipulation machine is feeling some sting from this has to be satisfying for Wallstreetbets. I mean, I know it is, because if you go onto Wallstreetbets right now, they are just eating all of this up. They love it. People are posting about driving GME all the way up to $1,000, which honestly might just eviscerate some of these short positions. Now, I don't actually know if it'll reach that high. And I'll be upfront and say that I haven't put any money into GME. I won't make any recommendations on what you should do with your money. But I definitely will be sitting back with my popcorn and watching and enjoying this wild ride. So until next time.